Real quick peek at what's going on with the Dow Jones Industrials right now. Its session lows down about 650 points. I'm noticing, looking at all Dow 30 stocks in the red, particularly hard hit is Boeing. It's down $15 and a little bit north of $339 a share. If you think about it, Boeing would be an ideal target for the Chinese to punish, not only on plane orders that they've been making, which have been in just abandon here for the last couple of years. They've been the lion's share of Boeing's business. And then if they slow that down or set their sights on the aerospace giant at this time, obviously it would be the worst time. Goldman Sachs disproportionately adding to that. Apple with a separate issue it's dealing with, courtesy of the Supreme Court, that is not going to get in the way of some antitrust lawsuits regarding that company's app programs. That's a separate issue. So there's a lot going on here besides just trade-driven items. Matson Money CEO Mark Matson on what he sees going on. Ugly day. How do you think we're going to be dealing with all of this through the rest of the day?
Well, I think most people are going to be dealing with bad news the way they usually do, and that's panic. And that's the absolutely wrong thing to do. You know, investors need to train themselves when there's bad news to think of that as a long-term opportunity. All dips, whether it's 3% or 30%, are all temporary in nature. You know, even 2008 and 9, a 50% drop. The S&P's up 5 times since then, nearly 5 times. So it really tries investors' hearts. But calm down, take a deep breath, and use this as an opportunity to rebalance and buy more while it's slow.
All right, but it's sort of like catching a falling knife, right? I mean, you just steer clear for a while. For people who might not have your stomach for the volatility here, you're quite right to say that maybe people are getting, I wouldn't say used to this, but not as wacky about this, because the VIX, you know, has not hit highs we reached last week, but it's still up there.
Yeah, I mean, the analogy of catching a falling knife, the problem is you don't know when it's going to stop. It might bounce right back tomorrow. How many times have we seen terrible things happen? You know, even Black Monday years ago, the market was down almost 20%, and it comes back just like that. On average, Neil, the market takes, even in a 20% hit, it only takes about 111 days, trading days, to correct and go back up to.
But you can get sucked in as well,
so,
right? I mean, I'm not here to be a Debbie Downer here, but if you had bought the stock market in the fall of 2008, remember that time the TARP vote went down, they didn't get the troubled asset relief vote that they thought they would get. The Dow sunk about 800 points. People rushed back to vote on it again. Market came back, but within a few months, it was still down another 6,000 points. I know we were in the middle of a meltdown then. In retrospect, you could say that, but it's dicey sometimes. What do you tell people who have a portfolio now not to sell, not to add? What?
Well, so there's 2 ways people try to control risk. One is trying to predict the future, and that's a fool's errand. No one can predict with anything like accuracy what's going to happen tomorrow. So what you do is you offset the risk by having a certain percent of your portfolio in short-term fixed income, which will reduce the volatility. Then if that 6,000, hit comes, you still can take that volatility, and then you'll have fixed income to sell and buy it when it's low. I know it's not a popular thing to do.
No,
it's not an easy
thing
thing to do, but it's a thing that investors should do that works long term. Because I don't know any way to predict the short-term volatility of the market. People are being honest with you; they don't know either.
Yeah, you're right about that. And there are a lot of ways to play this, and it's your perspective. Younger people can ride it out. Older people who look at long-term as in what they're going to have for lunch tomorrow, maybe a little less inclined to do what you just advised. But we'll watch it very, very closely, Mark. Thank you very much.